Hey guys, Mike here. So we'll get to answer all your questions and comments in today's videos, and you had some good ones. We'll go over the stages and stocks, how you tell it, and it's different between each stock, by the way, just FYI. I think you'll enjoy that. Also, some of you guys had questions about the fear and greed indexes, because one's showing greed, one's showing fear. How could that possibly be? I'll go in and show you exactly why. And then some other questions. One was very interesting about Jeff Bezos and how he borrows money against the stock, and if he passes it on, would his kids actually have to pay the money? And I think the answer will actually surprise you very much on that. So let's go ahead and get into it. Feel free to participate in the comments and answer some of these questions. I am going to ask you a couple at the end. As a matter of fact, I'd like to get your opinion on. Now, first one comes from Covered Call, like the name. How do you know when stocks enter different stages? Well, let's go to the friendly Discord here. We're going to go into stock resources, and right here, I'm going to click on this right here so you can see it. And I'm going to read this at the top, and then we'll get to the stages in the bottom, right? So obviously liquidity drives markets, monetary policy works with a lag, stocks discount the future. What matters is the return over the full cycle. Time to be greedy during stage 2. Stocks should be sold during stage 3. I'm not telling you to do that. No buying / longs during stage 4, and you'll definitely see why. And so look, this is the stages, right? And so what you do is you put your 30-week moving average on a weekly chart. You see stage 1, right? Things are bottoming out of a crash and everything, consolidating, and then boom, here's the breakout. This is when you get the majority of the gains, right? This huge move up, which I'll show you in real stock charts. Stage 3, we're getting ready for distribution on this puppy and the crash. And then stage 4, oh boy, here we go. Hold on to your pants and put your diapers on. So here we go. Right, and then we end up right back in stage 1, rinse and repeat. All right, and each stock is going to hit these stages in a different time, okay, depending on what kind they are. For example, Microsoft, right? Clearly, you can sit here and see that was a stage 4, that was 38% down. Boom, this is 2022, right? Then remind, this is a weekly now, so this right here stayed in stage 1, very short amount of time. That's what I'm saying. Some are going to stay in stages, which I'll show you for a long period of time. This would be your fintechs and stuff, right? This one stayed in there. I think it was, what was it, 2 months, 3 months? I think it was 3 months. And then you can clearly say stage 2. When I say the most gains, this is the parabolic phase, right? It just moves up. You're like, holy moly, okay? And so that's Microsoft. Now, of course, eventually we'll get to, you know, distribution or whatever it is. But again, stage 2 can last a long time. Each cycle is different, all right? So just remember that. When you come out of 08, you clearly see a stage 4. And then, of course, really, you're looking at this going, wait a minute, where's the stage 1, right? It's kind of like a V-shaped recovery. But honestly, even if it was a V-shaped recovery, you can clearly see it stayed right there in this range for quite a while before going to an extended stage 2 for a long time. This is where the Fed jumped in and everything else, right? Government took over the stock market. So now you look at ARK. This is, you know, I'm not trying to pick on ARK, but they're the poster child for these stages, right? Stage 1, oh my God, look at stage 2 right there. Again, that's really a stage 3 right there. It's like, okay, cool, here we are, and then boom, absolutely crashes to dust, okay? But what's happening with this one? As Microsoft has gone on to make all new all-time highs and all this stuff, here's ARK, still sitting in this exact same area, stage 1, that it was back all the way back in 2018 to 2020. So clearly you look at that and you're like, it's testing, it keeps failing at the 30-week moving average, but again, it's trying. So each stock is different, and the key really is, and before we continue guys, please hit that thumbs up down there. It helps people find the video. I really appreciate that. And think about subscribing if you like these kind of videos. Understand that clearly, okay? And so remember, what stocks are going to get bought up out of a crash faster than anything? The ones that make money, the ones that have cash flow, the ones that are way less risky, like a Microsoft, Google's, these type, right? They're moving, Apples and all that good stuff. What's not going to get bought up in the bottom usually is going to be the high flyers like an ARK or something and things of that nature, and they'll come up later. Like you still see FinTech, I've showed you many times. It's still staying in stage 1. Every time we think we're going to bust out, this is it, woohoo! Just nothing there, right? Because rates are crushing them, okay? And so they can't hold it, and there's other you know, sectors as well are doing that. So again, and then there's just your flavor of the month, right? Semiconductors caught on fire, and away we go because AI started pumping. So different things, you know, affect the cycles and stuff. It's all based on cycles, and so I hope that helps. Now, next one here comes from Andrews 57217. He's a fellow colorblind person. Glad to hear that. I've had a hard time distinguishing the last 2 weeks since we switched from the light background when it comes to the moving averages. I'll say this right here. Normally, that's why you'll hear me call out, and a lot of times use an arrow to tell you which moving average I'm talking about. Also, the fact that usually I'll try to put up just one if we're really honing in on one, but I try to call it out to you because I'm colorblind too. And TradingView, when you hover over the colors, they don't show you the colors, which really aggravates me. I think we need to sue them for discrimination. That's what we need to do. We'll probably win. Now, number two is I also noticed the divergence between the two fear and greed indexes, right? So why is this happening? And so if you look right here, what he's referring to is, you know, I send out this every day to our Patreon members and stuff. And so again, this goes over sentiment, right? This is sentiment. So it's like, you know, I do a PI investing fear and greed index, which measures one thing, and then CNN fear and greed index, which is the most popular, measures stuff totally different, right? So you go into this one, where 66% we're in greed, okay? So what it's telling us is that there are 66% of stocks in the market in an uptrend and are above their 6-month EMA. So this one measures totally different. You can see the chart down here. Again, when it gets way, way up there, the nosebleed seats, you know, time to get out. When it's way down the bottom, everybody's scared to death, the world's gonna come to an end. That's really when you want to, that's your best buying opportunity. So just a side note on that. But when you look, here's the one that most people see, right? All the time, gets posted on Twitter and stuff. And it measures 7 fear and greed indicators, okay? You got market momentum, which is in greed, right? So S&P and its 125-day moving average. You can clearly see that's an uptrend, right? Stock price strength, right? Net new 52-week highs and lows. That's an extreme fear, right? Don't see a lot of those right now going on. All right. And then we scroll down and you see stock price breadth, McClellan volume and summation index. And I got descriptions on these beneath them if you need to see it. That's in fear. All right. So now, and remember, this was fear yesterday. It became neutral Friday. Excuse me. It became neutral Friday when I reported this. Put and call options, the big one people like to look at. So they do a 5-day average. You can see that's in neutral right now. Was in fear, now neutral. All right, so now market volatility, again, was in fear, now neutral. And so this is the VIX and it's 50-day moving average. The VIX has just been crushed, right? Nobody's worried about anything, it seems like, right? So that's in neutral. And then safe haven demand, difference in 20-day stock and bond returns. That's in neutral as well, was in fear. Got a nice little pop over the last week. So now that is in neutral as well. And then we have junk bond demand. Remember I always talk about HYG and stuff. This is junk bond demand versus investment grade, right? That is in greed right now. And so, and if you keep scrolling down, it's going to tell you how to use this and everything else, right? So that is the reason you're seeing a difference. They measure totally different things. Now you know what the CNN one actually measures, which is really good things. I like those 7, but it's good to have a different perspective. It's when they line up and start moving both into greed and both into fear. That's when you really need to raise up in your seat and start being aware and pay attention to really what's going on, okay? So just keep that in mind when they come in sync. So I hope that helps. Now, next one says, and this is a very interesting one, if Amazon's Bezos makes money by taking loans from his stock, then takes another bigger loan to pay his last loan and does this until his death, all of this to avoid capital gains taxes, wouldn't his heirs be forced to pay a massive bill after his death? And for those who know what I'm talking about, this goes back. I've said this many times. For those who don't know, like rich people, like Elon, right? He doesn't take a paycheck from Teslas. People say, man, he don't take a paycheck because he's so generous and nice to the company. That's absolutely not true. He takes his through stock options, things like nature, like hundreds of millions, right? And so he doesn't take a paycheck because he don't want to pay taxes, right? He had to pay a boatload of taxes. Why would you want to do that when you just get it in stock options and stock? And then what the rich do, I'm talking about the wealthy guys, right? Even I guess the rich, but especially the wealthy, is they go to the bank and they say, hey, I got all these stock options, these stock, whatever, I want to take a loan out against it. And the bank goes, yeah, all right, baby. And they take a low interest loan out, right? So the interest, they're going to pay the interest, but it's way better than paying FICA taxes like you and I. Okay, so these people aren't doing it for generosity. They're doing it because they're really smart and their lawyers and accountants tell them not to. All right, as Warren Buffett has said many times, he pays way less in percentage of taxes than his secretary does, okay, because she has to pay, like most of us do, FICA, right? And that just sucks. And so, and then state and whatever taxes. So again, and so the answer, again, I'm not an accountant or a lawyer, but when I look at this, remember, he's only going to get the gains or the capital gains tax if he sells it, right? You can pass stock on, all this stuff. And again, if you're a lawyer, accountant, put in the bottom. But I will say this, look at what my answer would be. What I would guess is no. The reason why I'm saying that is because of this right here. And I actually discovered something which I'd never seen before. Maybe I know if you've heard of this before. But you can see right here, ways to protect your inheritance from taxes. This is for really, really people with a lot of money. right? But when you look, you can see definitely going to be having trust. Certain types of trust can help avoid estate taxes. An irrevocable trust transfers assets of ownership from the original owner to the trust beneficiary because those assets don't legally belong to the person who set up the trust. They aren't subject to estate or inheritance taxes when they pass through. And also, they can also gift things and all that good stuff. When you look at this, there's many ways to do it. The one I did not know about, and let me know if you actually did, was this one right here. It says private placement life insurance, or PPLI, can be used to pass on assets from stocks to yachts to heirs without incurring any estate tax. In short, an attorney sets up the trust for wealthy clients. The trust owns the life insurance policy that created the offshore. And so, again, it's a guess to say I don't think they would have to worry about capital gains, because there's just so many ways to get around this, guys, that most normal people, we don't worry about this kind of stuff. But remember, I always tell people, Congress, there's a reason why it's important to understand that percentage of multimillionaires and billionaires in Congress affects things. Well, they're the ones that pass the laws, for those who don't know or those who aren't from this country. And so if they're multimillionaires and billionaires and they can pass the laws, do you think they're going to pass more stringent laws to where they can't leave more to their heirs? Or do you think they're going to pass laws which make it easier for them to leave more money to their heirs, right? And so that's why it's important to understand that, all right? Most people don't have to worry about that, but again, maybe you look at that yourself or anything if you got enough money and you want to do that. So yes, there's ways they avoid it, and I'll be stunned. And remember, as a side note, I'll say this. I always hear people say, oh, the insiders, they're going to time the top. They're selling. We got to get out and stuff. Don't forget, Jeff Bezos just sold, what was it, a couple months ago? I mean, it was millions upon millions of dollars in shares of Amazon. And where is Amazon at right now? All-time highs, baby. So again, that stuff right there, sometimes these guys just got to buy yachts. Sometimes they got to fund a space company. You just don't know. All right. Sometimes they got to pay taxes on capital gains. And so they sell stock to cover the taxes. All right. They do that. It happens. I mean, if you were worth that much money and had that much in stock, wouldn't you sell some too? I think I would. So anyway, just putting that out there. Hope that helps. Now, this is an interesting one. Mike, do you know how frequently Fidelity mixes up the basket of stocks that it has in its target fund dates? I've heard it's yearly, which is why the returns look awful. Actually, it is monthly, according to this. Fidelity rebalances the composite benchmarks for its index target date funds monthly. Target date funds are automatically rebalanced periodically to maintain their target asset allocation. Research shows the systematic rebalancing trends tend to improve a portfolio's long-term performance. Hope that helps. And lastly, I'll ask you guys to answer this one from Dr. Marcus. Short question for you today. Any good investment books you can recommend besides the big ones like Rich Dad, Poor Dad, or The Intelligent Investor? And so I'm definitely looking at you guys. Please put in the comments, what is your favorite investment books? I've read those right there. I've read a bunch of others as well. But for me personally, just because I have a YouTube channel, I do a boatload of research. I'm talking to you guys. I'm talking to the members and going back and forth with ideas and things like that. It's just, I don't really have time to sit down and read any kind of book anymore. And so that's why I'm going to lean on you guys to say, and I'd rather see something more current, right? I mean, definitely a book. You guys know any books that have been written in the last, let's say, 10 years, 5 years that you find really, really good? And so that's what I like to hear. So hopefully that answers all your questions. Feel free to please help out in the comments with some of those questions as well if you have any. And please put any more you want me to answer for next Saturday's video, and I'll try to get to it the best I can. So we'll end up setting up tomorrow's video. Is going to be interesting because I'm going to go over a few things. Not just set up the week, but really to look out for the next probably like 6 months, guys. Like really look out for this. And it's not a prediction. I'm just saying look out for it. And I'm also going to dispel a myth I see, because one of you guys asked me a question. You said, oh, these people over here are saying this about, when the first rate cut comes in, this is what's going to happen. It's total BS. I'll show you on the charts. It only took me a couple minutes to put it together for you, so I'll show you that as well. So please hit the like and subscribe button on the way out. Really appreciate all you guys, and I hope you enjoy the rest of your weekend.